In this video, I'm going to explain everything you need to know about your upcoming benefit increases. If you're receiving Social Security retirement, SSDI, SSI, or even VA benefits, this message is for you. Many of you have heard that payments are going up, but the real questions are, how much, when will you actually see it in your account, and what does it mean for your household budget? I'll explain why your benefits are going up, how much the average person can expect to receive, how this impacts retirement checks, disability payments, SSI, and VA benefits, when exactly you'll see the money, and what you should do right now to make sure you get the most out of this increase. Before we dive in, let me ask you, where are you watching from today? Just drop your city or state in the comments. It's always wonderful to see seniors from all across the country learning together. Point 1. Why your benefits are increasing. Every year, the government checks the economy to see if seniors and people with disabilities are falling behind because of rising prices. This review is called the Cost of Living Adjustment, or COLA. The purpose of COLA is simple: when the cost of everyday items like food, gas, housing, and medical care goes up, your benefits need to rise as well. Without this adjustment, the money you worked for would lose value, and it would become harder to cover your basic needs. To calculate this, the government uses something called the Consumer Price Index for urban wage earners and clerical workers, CPIW. While that sounds complicated, it simply measures the prices of common goods and services that most households use. If the index shows that prices are higher compared to the previous year, Social Security benefits are raised by the same percentage. This process helps protect your income against inflation. Here's the good news: once a COLA increase is given, it's permanent. It's not like a one-time bonus. It becomes part of your monthly check going forward. That means every new adjustment builds on top of the last one. Over 5, 10, or 15 years, these increases can add up to thousands of extra dollars in lifetime benefits. Let's look at an example. If your monthly benefit is $1,500 and the COLA is 3%, you would receive an extra $45 each month. That adds up to $540 more over the year. And since your new base becomes $1,545, future COLA increases will be calculated on that higher amount, not the old figure. Now, it's true that many seniors feel these adjustments don't fully match real expenses, especially healthcare costs. Still, COLA plays a crucial role in protecting your income over time. Understanding how it works can help you plan your budget and give you peace of mind knowing these benefits are your right, earned through years of hard work and contribution. Point 2. Social Security retirement benefits. Retirement benefits are the foundation of income for millions of older adults. On average, a Social Security retirement check is a little over $1,900 per month, though the exact amount varies depending on when you started claiming and how much you earned during your working years. This is where the Cost of Living Adjustment, COLA, becomes so valuable. Instead of a flat increase, COLA is applied as a percentage of your current benefit, meaning the higher your benefit, the larger your increase in actual dollars. For instance, if you currently receive $1,900 per month, a 3% COLA would add about $57 per month, nearly $700 over the course of a year. If your benefit is $2,500 per month, the same adjustment would give you around $75 more each month, or close to $900 more annually. For couples, both checks rise, effectively doubling the impact. This compounding effect adds up significantly over time, strengthening household income year after year. Some retirees worry that part-time work or other income might reduce their COLA increase. The truth is, it doesn't. Whether you're still working a few hours a week, collecting a pension, or relying only on Social Security, the COLA applies equally. Everyone gets the same percentage increase based on their current check. Another overlooked factor is survivor benefits. If both spouses are collecting Social Security, both checks rise with COLA. If one spouse passes away, the surviving spouse will continue receiving the higher adjusted amount. That extra protection ensures long-term security for widows and widowers. This matters because retirement often lasts 20 years or more. Prices for food, housing, and healthcare will continue to rise, and small annual increases build into major lifetime protection. Even if an extra $50 or $70 each month feels modest now, it can cover essential expenses, ease financial stress, and keep your retirement income strong well into the future. Point 3. Social Security Disability Insurance, SSDI. Many of you watching may be receiving Social Security Disability Insurance, SSDI, instead of retirement checks, and sometimes it feels like SSDI isn't part of the conversation. But the truth is, SSDI is directly tied to Social Security retirement. Whatever increase retirees receive, SSDI recipients receive too. That means you are not left out, your checks rise by the exact same percentage. This is especially important because living with a disability often brings higher expenses. Medical copays, prescription drugs, medical equipment, home care, and even the cost of traveling to and from appointments can quickly drain a limited budget. For someone on a fixed income, even a modest increase can make a noticeable difference. Take this example: if you receive $1,300 per month in SSDI and the COLA is 3%, you'll see about $41 more each month, which adds up to almost $500 extra in a year. If your benefit is $1,800 per month, your increase would be about $58 per month, or nearly $700 a year. While those numbers may not sound huge, they can cover a prescription refill, pay for rides to the doctor, or help with groceries, things that directly affect your quality of life. Another point many people overlook is that if you have dependents, such as a spouse or children, who receive auxiliary benefits based on your SSDI record, their payments rise too. That additional income can provide meaningful relief for families already dealing with the financial and emotional strain of disability. Best of all, these increases are permanent. Just like retirement benefits, each COLA becomes your new base. Future raises will be added on top of that, stacking over the years and amounting to thousands of dollars more across your lifetime. For people on SSDI, every penny matters. Unlike some retirees, many don't have pensions or savings to lean on. These annual increases are about more than numbers, they're about dignity, independence, and security. You've earned them, and they are here to help you stay steady as costs rise. Point 4. Supplemental Security Income, SSI. Supplemental Security Income, or SSI, is different from retirement or disability benefits. It is a needs-based program meant for people who have little or no income and very few resources. For many, SSI isn't just extra support, it's their lifeline. It helps cover the basics when there is no other income to rely on, and that's why even small adjustments can feel so important. Currently, the maximum federal SSI payment is $914 per month for an individual and $1,371 for a couple. That amount is already very modest, especially with today's rising prices for rent, food, and healthcare. With a COLA adjustment, these payments increase proportionally. For example, with a 3% COLA, an individual would receive about $27 or $28 more each month, while a couple would receive around $40 or more. Now, to someone not living on SSI, $20 or $30 might not sound like much. But for those who depend on it, that small increase can make a very real difference. It could mean being able to buy enough groceries for the week, keeping the lights or heat on during the winter, paying a phone bill, or having just a little cushion for emergencies. When your budget is stretched to the limit, even a small bump can mean stability. However, there is one complication. Because SSI is needs-based, an increase in your monthly payment can sometimes affect other programs tied to your income, such as Medicaid, SNAP, food stamps, or housing assistance. If your SSI payment goes up, technically your income rises too, and that might trigger changes. This can feel worrying, but don't panic. Many states have protections and exemptions in place so you don't lose critical support over a small COLA increase. The key is to stay alert. Always read official mail carefully, check your accounts online, and act quickly if you receive notices of change. You may have the right to appeal or request an exemption. In short, while SSI increases may look small on paper, for those relying on them, they mean survival, dignity, and stability. And once added, each increase is permanent, building year after year to help you face a rising cost of living. Point 5. Veterans Affairs Benefits, VA. Many people don't realize that veterans' benefits are directly tied to the Social Security COLA increase. This means if you are a veteran receiving disability compensation, or if you are the surviving spouse or dependent of a veteran, your payments go up by the same percentage each year. This is an important safeguard, because veterans and their families often face unique challenges like higher medical bills, ongoing healthcare needs, and fewer options to supplement their income. Here's how it works. Each year, once the Social Security Administration announces the official COLA, the Department of Veterans Affairs automatically applies that percentage to VA disability compensation. Veterans don't have to file paperwork or request the increase, it happens automatically. For example, a veteran rated at 100% disability who receives about $3,700 per month would see an increase of around $118 monthly with a 3% COLA. That's over $1,400 more in a year, just from the adjustment. And it's not limited to those with the highest ratings. Even if your disability rating is 40% or 50%, your payment will still rise by the same percentage. While the dollar amount will be smaller, the protection is the same. Your benefits keep up with inflation so you don't fall behind as costs rise. It's also important to note that dependency and indemnity compensation, DIC, the benefit paid to surviving spouses or children of veterans, also increases with COLA. For widows, widowers, and dependents, these adjustments can help cover essentials like property taxes, groceries, or medical needs. Many veterans and their families say these yearly increases truly matter. They may not erase every financial struggle, but they can ease stress, help keep bills current, and provide more stability. So if you're a veteran or a family member, remember, you are included. Just like retirement, SSDI, and SSI, your increase is permanent and builds over time. This ensures that the service and sacrifice of veterans and their families continue to be honored and protected, even as the cost of living rises. Point 6. When will you see the money? This is the question I hear the most. When will I actually see this increase in my bank account? And it's a fair question, because knowing the timeline helps you plan your budget and avoid unnecessary worry. Here's how it works. The Social Security Administration announces the COLA increase in the fall, usually in October. But the new amounts don't show up right away. Instead, they start with the January payments of the following year. That means if you're looking at your December check, it will still look the same as always. The higher amount will begin with the first payment you receive in January. Now, not everyone gets their payment on the same day. Social Security uses your birthday to decide your payment schedule. If your birthday falls between the 1st and 10th, your payment comes on the second Wednesday of each month. If your birthday is between the 11th and 20th, you'll be paid on the third Wednesday. If your birthday is between the 21st and 31st, your payment arrives on the fourth Wednesday. So, depending on when your birthday falls, you may see your new payment early in January, or you might need to wait until the middle or even the end of the month. For SSI recipients, things are a little different. SSI checks are typically deposited on the first of each month. But if the first lands on a weekend or a holiday, the payment is made on the last business day before that. That's why sometimes SSI recipients actually see their new COLA-adjusted payment in late December, even though it's technically the January check. It's not a bonus, it's just paid a little early because of the calendar. For veterans receiving VA benefits, the schedule is also different. VA payments usually arrive at the start of each month. That means your January deposit will reflect the new higher amount right away. The key takeaway here is this: don't panic if your December payment looks unchanged. That's normal. The new COLA doesn't take effect until January. If you're unsure when you'll see your increase, the best thing you can do is log into your My Social Security account online or your VA.gov account if you're a veteran. Both of these portals will show you the updated amount of your benefit once it has been calculated. Remember, it's not about whether the increase is coming, it's about knowing the exact timing so you can plan with confidence. By understanding the schedule, you'll be ready to put that extra money to good use the moment it arrives. Point 7. What you should do right now. Now that you know your benefits are increasing and when the money will arrive, the next step is preparing yourself so you can get the most out of this adjustment. A raise, no matter how small, only makes a difference if you manage it wisely. So let's talk about what you can do today. First, check your account online. If you don't already have a My Social Security account, I strongly encourage you to set one up. It's free, secure, and it gives you direct access to your information. You can see exactly how much you're currently receiving, what your new benefit will be, and the date your updated payment will arrive. For veterans, your VA.gov account serves the same purpose. Checking these portals regularly helps you avoid surprises and gives you peace of mind. Second, review your household budget. Even if you've never been someone who writes down every expense, now is the perfect time to think ahead. Let's say you're going to receive an extra $70 a month. Decide in advance where that money should go. Will it cover rising grocery prices? Will it help with medication copays? Will you put it toward utilities, transportation, or maybe save it for emergencies? When you have a plan, you make sure that money goes to the things that matter most, instead of disappearing into day-to-day spending without making an impact. Third, watch how this increase affects other programs. If you're on Medicaid, SNAP, food stamps, or Section 8 housing assistance, your higher benefit might technically change your reported income. Most states have protections in place so that a small COLA increase won't take away your benefits, but not always. That's why you need to read every notice you receive in the mail and, if something looks wrong, act quickly. Often, you have the right to appeal or request an exemption, but deadlines are short. Being proactive protects you. Fourth, consider your taxes. Many seniors don't realize that Social Security benefits can become taxable if your combined income passes certain thresholds. A COLA increase, even if modest, could push you into owing a little more. The last thing you want is an unexpected tax bill in April. Talking to a tax professional early in the year can save you stress later on. And finally, remember the big picture. This increase isn't just about today, it's about tomorrow and the years to come. Every COLA becomes part of your permanent base, so your benefits keep building year after year. Over a decade or two, this adds up to thousands of extra dollars that you've earned and deserve. So my advice is simple: stay informed, plan ahead, and use this increase as an opportunity to strengthen your financial stability. You've worked hard your entire life. These benefits are here to protect you, and with a little preparation, they can go further than you think. So my friends, here's the truth: these increases may not feel like a fortune when you first hear the numbers. Maybe it's $30, $50, or $70 more each month. But the real value isn't just in the size of the raise, it's in the fact that it's permanent and compounds over time. Each increase builds on the last, year after year, protecting you as the cost of living rises. Over the long run, this can add up to thousands of dollars that will help keep your household stable and give you more peace of mind. I know many of you are living on fixed incomes, and every penny matters. That's why it's so important not just to hear about these changes, but to really understand them, plan for them, and make the most of them. Whether you're on Social Security retirement, SSDI, SSI, or VA benefits, these adjustments are designed to support you. They are not gifts, they are rights you have earned through years of work, service, and contribution. Think about what this means for you personally. Will that extra money help you afford your medication without worry? Will it keep your home warmer in the winter or cover your grocery bill a little more comfortably? Will it ease the burden for you and your spouse, or give you just a bit more breathing room each month? However you use it, this increase is meant to give you more stability and dignity in your daily life. And remember, staying informed is just as important as receiving the money itself. Always check your accounts, read your mail carefully, and ask questions if something seems unclear. The more you know, the better prepared you'll be to protect yourself and your benefits. At the end of the day, this isn't just about numbers on a page. It's about you, your security, your independence, and your ability to live your later years with less stress and more confidence. You've earned that right, and I hope today's explanation gives you the clarity you need to feel reassured about what's coming. So, as we wrap up, I'd love to hear from you. How do you plan to use your increase? Will it go toward bills, food, health care, or maybe even a little something special for yourself? Share your thoughts in the comments, because your ideas might inspire someone else in our community.